That's live. What's up? What's up? What's up? Let's record this. All right. Hey, good evening. Happy Tuesday. BeastModeBrandon back again. You know, it's a great day when you got the DCG Team Elite gear on. Stay tuned because we do have a store that's open right now. If you guys want any DCG gear or any apparel, we got it. So hey, it's not just going to be me having fun anymore. I always feel like I have a better day when I wear it. You know what I'm saying? But that's just me. So hey, training comes back to these three things right here: follow your plan, stay consistent, and use proper risk management. Without any of those three, you are going to fail as a trader. But once again, that's just my opinion. I appreciate you guys for coming on here today. I have been getting a couple messages. Some things people are not understanding how to get right. But I just want to share with you how I do it in a much simplified way. That way you can come into the Discord, and if we got all 20, 30 people, 50 people, 100 people all dialed into the same exact logic and method that we're thinking, then we all can find more plays. So I'm only sharing this with you guys because it makes my job easier. More money for all of us, right? I told you guys 2024 is going to be our best year yet. I have some of you guys swing trading with me specifically. Me and Mike, we do have a WhatsApp chat just for options traders. If you're not in that, just let me know. I can put you in that. We do call out strictly a day trade, 1 or 2 trades a day. And we also put the swing trades in as well. So a lot of you guys are already in the WhatsApp chat. I got one, so yeah, just let us know. We'll put you in there, and we're gonna rock and roll. So hey, let's dive in. Let's get it. I don't want to take too much of your time. I'll go through what I have to go through first, why I take some trades that I do that give us a great idea. And then we're going to fire up the scanner and see if we can find some stocks for us to keep an eye on. After that, I'll open it up for questions for all you guys. So if at any given time I'm talking about something, you do have a question, just post it in the box. If not, let me get through my part first, and I'll open it up to you guys as I do. We do this every single Tuesday and Thursday night for us on the inside. So if you're watching this recording and you do want to participate, just let us know. We do a lot of things. A lot of people think trading is difficult because they can't sit in front of their computer and day trade. Hey, we can swing trade. I got a perfect plan for you. If you have 3 to 5 minutes a day, Bob L, he missed it today, but that was on him. We set the alarm, set the alert every single day at the same time. You have a certain account size, you can participate every single day. If you have a smaller account size, then you just got to wait for better probability setup. So let's dive in and let's roll with it. Let me share my screen and let's see what you guys see. What screen do you guys see? You guys see the trading or Thinkorswim screen, or you see my other monitor? Which one?
You got Thinkorswim up.
Okay, perfect. All right, that's cool. We could do Thinkorswim, or we could do yeah, we'll just do Thinkorswim. All right, so real quick, man, that's gonna be a hard background to do this one, but hey, that's what we got to play with. My computer be doing these weird updates. All right, so in the grand scheme of things, right? In a simplified trend, I can't even see that. Let me see if I get something better. I could see this one. All right, I cannot even see that one. Purple, can I see this one? Yeah, I can see the purple the best. We're gonna purple it out. All right, so when I'm looking for, yeah, I can't even see that anyway. All right, let's do this a different way. Not that layout. We can do this one right here. All right, so what when we trade, right? If you didn't know this, you do know this now. You got your trend right here. That's much better. You know, trend, when you find trades in sync of the trend, they tend to be 2 times larger than moves against the trend, right? Also, I like to understand where the trend is along with support plus resistance. Why? The grand scheme of things in this class is basically help you determine where there is a support or resistance level area so that we can put an area of concern and take some of the trades that we put out. It don't matter whether you take the straddles, the strangles, the iron condors. We could take highly probable setups around these areas, right? Straight call, straight puts, whatever. So first things first, in the grand scheme of things, right? Very simplified way. An uptrend is simply a high, low, high, low, high, low. That's uptrend, right? Up. There's your upward channel. Down here, that's your downward channel, right? Down. I'm going to put down. That's your downward channel. Within that downward channel, right, you have your support and resistance. So if this high right here, I'm going to draw a line, and look what happens. Price breaks out right here, makes a new high, comes back down, bounces off that previous area of support. This would be that reaction area that we're talking about, right? So we get paid when we're in a directional trade, right? Or a strangle or straddle when we get a reaction. So a lot of people say, well, how can we find some things for us? Why are we taking it? That's exactly what I'm going to go over real quick, and it's a lot easier than what a lot of people think, or at least we want to break it down in a real simplified approach. Same thing. Price pushes back up. You see we get this huge push down. I put an area right here. Guess what happens? We break out, we come down, we retest it. We get that reaction again. You see that? And then we push right back on here, straight to the upside. In a downtrend, it is exactly the same thing. You see price come up, you push, this will be your support. Guess what? In a downtrend, we expect support to get broken. Exactly what happens. Comes right back up. Support is now resistance. You get that reaction again, right? And you're probably like, man, well, of course we know that, right? But if you don't understand the basics or the foundation, that's why we put you in a trade school first, then you ain't going to understand this when you see candles. You know what I mean? So you have to understand how we find this. So then once you take this basic concept and throw it onto a chart, right, I can show you to the right without even seeing what happens, areas of concerns where I would expect a reaction to come. And that's where I'm looking to take some of my strangles, straddles, and some of those weekly income plays, right? I mean, there's more that goes on behind the scenes in a sense where we use the AI scanners and stuff like that. That's why we're very, very good. But this is a basic standpoint, just to give you the logic. And you're going to take this and run with it, and you're going to post up in the Discord. So with exactly what I just shown you, I'm going to clear everything. Do we want to look at Amazon, or do you guys want to look at something different? Throw it in the chat box. First stock we see, we can do that. Just so you don't think I set it up, because you know me, I love Amazon. But if you guys want Amazon, that's cool with me too. Dion, you like Amazon or no?
Yes, sir.
All right, we're gonna do Amazon then. So let's roll with Amazon. All right. So first things first, how I get a perfect line. If you come up here to your drawing, we're in TD Ameritrade, or I'm sorry, we're in Schwab, Thinkorswim, right? TD Ameritrade ended up selling it to Schwab. Come down here to your drawing tools, and you are going to get this one right here where it says the $ and a line underneath it. So $ line. If I highlight over it, it says price level. You are going to click that. All right. So with what we just talked about, right? Very simple logic. We see that price pushes up. Let me get a different color here. Now we could do this this one right there. We see that price pushes up. We come back down. We push up. We come back down. We push up. We come back down. Remember that basic concept we just talked about, right? Come up, come back down, come up, come back down, up. Come back down, up, come back down, up, come back down, up, come back down, up, come back down. Now we're going back up. So see where all these hooks are at? This is a very simple way for you guys to put support and resistance. So now we have a low down here. We have a high. Guess what? At that very tippy top wick, I'm going to put a line right here. And it will actually put a line all the way over here. So now I can see that. Next high, I'm going to put a line right here. Next high, I'm going to put a line about right here. Next high, I'm going to put a line right here. Next high, we're going to put a line right here. Guess what we now just created, guys? Our own support and resistance. If you guys are with me, and you see how simple this can be, put a 1 in the box right now and make sure you guys are paying attention. Yeah, I told you it's this easy. So now, what do we have here, right? What do we have here? So this low right here, right? We don't got to put all the lows in. We can put the highs in. I see tons of ones. You guys are rock stars. Appreciate it. See right here, you don't want to put too many lines in because then it gets crazy. Now, if I zoom out, right, and I look over here, I now have price action areas on my chart. And give or take, if it gets close to it, I want to know that. All right, now let me ask you this. If you take a straddle or strangle at one of these levels, right, and we scroll back over here, since where we got it, we'll start right here. All right, look what happens. Let me erase some of this now, because now we have our lines. What do you think would happen if we took a straddle or strangle right here at this support area? Well, guess what happens? In 2 days, we went from 176 up here to 180. That's $4 in one direction, right? We come back here to our option chain, and we looking at Amazon. And we look at something like we buy 2 weeks of time. We'll just say we buy 2 weeks of time. If we buy a straddle, right? Remember last week we talked about a straddle masterclass? So if we take a straddle in this area, or this, oops, my bad. Let me get back to our same point. If we take a straddle in, oops, we don't want that. Auto zoom out. Where were we at? We were right here. All right, so let's zoom in. All right, yep, we were right here. There we are. We right back here. All right, so if we took a straddle right here at 176, this is why I like stock options, right? And you don't have to overcomplicate it. So we would expect to get a reaction at this area. Why would we get that? Because previously we put a high in, came back down, we broke this high, stayed right here at this high, right? And then we ended up breaking out to make a new high and cycling right back down to that support area. All right. So now, this is why I love stock options. So we come back here to the chart, and if we take a straddle, does anybody know what the difference between a straddle and a strangle is? Put a 2 in the box if you know what the difference is. If you don't know what the difference is, put a 1 in the box. I got you guys working tonight. I know. Got you guys working tonight. All right, so a difference between a straddle and strangle. A strangle is when you buy a call and a put of different strikes. So if you buy this call, you would have to buy this put. That's technically a strangle. If you buy this call and this put, that is a straddle. You're still buying a call and buying a put on both positions. A straddle is the same strike. A strangle is opposite strikes where they're different. It could be one down here, one at the money. So we did last week's, we did a masterclass on that. If you need the recording and you are inside our mastermind, feel free just to let me know. I can tag you in the video so that you can watch that, right? All right, anyway, so this is why I like, back to our chart again, this is why I like taking strangles or straddles at this area right here. Was this the area? Yep, no, it's back here. At this area right here, because we don't care which way it's going to move at this reaction point. We do care if we get an exponential move. All right. So in 2 days we got 4 points. Why I like stock options is because this right here. If we take and the IV, it's not fair to do this one right now because we got the earnings hike coming up here. So they're a little bit more expensive, but the logic is going to be the same. We're just not going to win as much as we normally would. So what we could do, if we come back down here to our chart and we see, well, at this point, our ATR was about $3. We might do $3 either direction. We don't care all these days. We care when we get close to a reaction level from a simple standpoint. So we might go out of the money three strikes each way. If we do that, you might take the 195 calls, and they're for $400, right? And then you come over here and you might take the 177.50 because they're $360. All right. And they would tighten up in a live market, but just theoretical. We have 360 on one side, we got 400 on another. Well, if this 360 goes against us, $4, because we go back to our chart again, right? $4, right? In 2 days. Check it out. Well, this side, we'll do the losing side first. 28, 24, 20, and 16. So we can take all those and we can add them together. I'm a visual guy, so I love to see the calculator. You got 28 plus 24 plus 20 plus 16 equals 40 divided by our cost basis of $360. We lost 11% ROI. So I'm going to put a minus 11% on the put side. On the call side, we actually would make 34, 39, 50, and 45. This is why I love stock options, right? Just hear me out. Because there's no upside. The downside is you can only lose 100% ROI of what you put into the trade. So we have 34 plus 39 plus 45 plus 50 equals 168, right? And our cost basis was $4 divided by 400. Guess what? You are up right now 42%. Well, people will say, man, I'm losing 11%. All right. Now, if you take both these together, you're actually net profitable 31% ROI. Guess what? That trade, waiting off the reaction point, right? Being patient. We get paid to be patient. You wait off the reaction point. Would you be happy with the 31% ROI net profit play in 2 days? Put a DCG in the box if you would. Put a DCG in the box if you would. Remember, we only get paid 4 or 5% for the whole year. We just made 31%. Why did we take that trade? Because we had a reaction. So now, what can we take with this right now? Guess what? We have an area where we came right up here to our resistance, reaction area. We would have taken our trade up here at 189. We would take a straddle or a strangle, right? And when we are underneath all of our moving averages, if we take a straddle, do we want the call to be in the money or put in the money? Bob L, I'm going to call on you. Or Michael Williams, you're unmuted. Would we if we take a straddle? All right. Who wants to go? Mike, you up?
Yeah, I'm listening.
Were you on last week's class or no?
No, I wasn't there last week.
All right, Bob L, you up?
All right, what's up?
All right, so listen, remember last week's class?
I wasn't at last week's class, so.
Oh, man. All right, you good
Let's
then.
see if I get it, though.
So if we take a straddle, right, and not a strangle, we take a straddle.
Okay.
If we are underneath our moving averages, we're going to make sure our, Gregory L. Should have called on you, bro. He says put in the box. Gregory L., hey, I'm going to have to get something for you, man. You've been showing up every single week. I appreciate that. I mean, might have to send you a T-shirt. You know what I'm saying? I got you. Yes, if we take a straddle and we're underneath our moving averages, we would put the put with the call, or the put side would be in the money. If we are above our moving averages right here and we take a straddle, we would take the call side in the money. Remember, a straddle, right, is now taking one call and one put. So we would take this, right? Or you could go deep into money. I wouldn't. But you take that call and the put, since we're underneath our averages in 1 day, right? In 1 day, I'd still be holding this, but this is at 189. It's at 183, right? That's $5 in 1 day. Now remember, if we buy 2 weeks of expiration time, my goal is to be risk-free as soon as possible, right? So if I buy 2 weeks of expiration time or less, and I see a casual 15 to 25% ROI, my favorite trade is a risk-free one. Wouldn't you guys all agree? Why? Because the market gives us unlimited opportunities all the time. So we don't have to be greedy, all right? We do not have to be greedy. So in this straddle instance, we buy one contract on the put side, one contract on the call side. So we would lose these. It actually moved 5 points. 1, 2, 3, 4, 5. So we can tally that up, right? Same thing. I'm a visual guy. So we would actually lose $50 because our delta tells us what we're going to lose for every dollar the share price moves in our favor. So we have 50 plus 45 plus 39 plus 34 plus 30 equals 198 divided by our cost basis of $700. We're losing negative 28% on the call side. On the put side, 50, 56, 61, we would win all these right here. We would actually be 5 points or we would be a couple strikes in the money. So actually we wouldn't get all those points, but theoretically, I'm just giving you I guess we would get 2 or 3 of them, but just to give you a nice visual, 50 plus 56 plus 61 plus 67 plus 76 equals divided by 775. That right there is did I erase that? Was that negative 18%? Yeah, I'm pretty sure it was negative 18. Negative 18 over here would be 40.
I think it was 28.
28.
Mhm.
All right, so on this trade right here, one day, you're up already 12% ROI. You know what I'm saying? That ain't bad in one day. So if you want to take profits on that, you could. But I like to shoot for that 15 to 25% ROI move. If you needed the capital, you could sell out. But anyway, there's another area that you could have taken profits. Now, what are we doing here? I'm in this trade off this reaction area, and that's what I'm looking for. If we break above it, like right here, see how this candle closed above it? Then if you don't like to take the straddles or strangles, and we're above all of our moving averages, I would take a directional trade, and I would take the calls, right? Same thing over here. If we broke underneath this area right here, I would take the puts. Just directional. And if we close back above it, I'd walk away from it. I'd be out. Or I would use the previous candle. If I took this call, I would use this candle as my stop loss. If I took the put here, I'd use that as my stop loss. So now, using our area of support and resistance, we can position ourselves to take the calls or the puts or the straddles or the strangles, right? And then some of us actually sell option premiums, right? We take the iron condors. So then you bring this up, which is a whole different animal by itself. Let me make this bigger here. And then now, with this technique, it's like you can simply use this solely by itself, right? Standalone. And I got all these alerts firing off. Since we're on Amazon, you look at something just like this, Amazon, where you see our AI swing, we would actually take this with Friday's expiration, and we would say, well, if we come down here to the weekly time frame, how many times does it move? How many times does it move? Or I'm sorry, go back to the day. How many times does it move that move against us? So like you could be in and out the same day using the same technique. I'm gonna pull up SPY because they have daily expirations. But like think about it. If our AI swing says 521 and we want to sell an option spread or an iron condor, this is why we win a lot, because you see something like this, like right here, we go on a streak, right? This says 521. This does move, right? This does move, but think about it. If we stay in this sideways action right here, you'd have 1, 2, 3, 4, 5 winners. This one up here would be a loser. 1, 2 more winners. This would be a loser. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 winners. 9 winners. This one would be a loser. And you'd have a winner. Let's see. 48, 51. That's definitely a winner. 2, 3, 4. 4 winners. Then you have a loser. Then you have a loser. Then you have a winner. 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 Then you have a loser. You have a loser. You got a winner. Winner. And then look where we at right now. So there's different techniques, give or take. That's something that we do call out in our chat. I do see us on over on YouTube. We got a party, man. There's what, 33 people watching. Hey, welcome. I see him over there. Anyway, so now we go back. Someone give me another stock. Same method, same thing we just talked about, right? So now going forward, before we do another stock, what do we have right here? I'm going to set alerts on my trading view. If we come back up here close to 200, if we come back up here close to 191, if we come down here close to 178, I'm going to set alerts. Why am I going to set alerts? Gregory L., why am I going to set alerts right there?
You set an alert so you know when to get in.
You're darn right. You set the alerts because there are area of reaction, and we make money when we have areas of reaction, right?
Yes.
Man, you on fire tonight. Appreciate it. All right, someone give me
Appreciate
another.
you.
So now for Amazon, we should have 3 alerts right now. So we may not get a trade for 5 or 6 days, and that's okay because remember, we are paid technicians, we are doctors, we are patient, and we wait for our highest probability setup. All right, someone put a different stock in the box. Or someone come on the mic and say something. We'll do another one. So we take what we learned, get our 3 alerts on TradingView, and we good. All right, Mike says Qs. Let's see Qs. Same logic that we just did. I'm going to erase this, clear drawing set. At every high, right? Sometimes it's easier to do it like this. There's a high. There's another 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 high. 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 So now at this right here, I'm going to put my line. At this high, I'm going to put my line. At this high, I'm going to put my line. This all right here is the same exact line. All 3 tops. Here would be another high. Here would be another high. And then this, oops, it didn't go through. And this one would be a high. So now we got levels on Qs. Our reaction areas. Let's zoom in. What do you think would happen on the Qs? Now we got our 3 levels. You see how we do this? Look, we break above it. You could take calls right here. There's your stop. If you like to take a straight call or straight put, there's a winning trade. You have a stop loss right here. If we get underneath it right here, you take your put. There's your stop loss. Price pushes down. We're stuck in between 2 reaction areas. That's one way to do it. Taking straight calls or straight puts. Second way, or third way, you take a straddle or a strangle. Same thing. Right here, if we had our alert right from over here, from previous, we come up in what, 2 or 3 days, we got that reaction area again. Look what happens. 487 down here to 472. That's 15 points in 3 days. I repeat, 15 points in 3 days. So now, let's just come back up here and look at the Qs. All right. So the Qs you could buy 2 weeks of time if you wanted to. 14 days. I mean, that was August 6th. Why is that being all crazy? I don't know why that's being crazy. All right, we'll just do 7 days. So it'd be a little bit more expensive, right? 14 days. But remember, if we're expecting to get some sort of reaction at this level right here, at 488, and at that point, Qs moves about $5, we could say, well, let's come out here and say we go $5 either way. So if we come down here $5, 79 or 80 would be 85. $312 on that side, and you got $316 right there. Because remember, when we take a strangle, we want the same dollar amount on each side. When we take a straddle, we want the in the money side to be if we're above or below our moving averages, right? So on this one, in 3 days, this one actually moved. Let's go back just to double confirm. If we took it right here in 1, 2, and 3 days, let's just say we took it on this day. So 85, 1, 2, in 3 days, it hit a low of 78. We took it right there at 84. That's $6, almost $7. So let's check it out. We'll do the losing side first, right? Let me put myself back up to the top. 7 strikes, deltas. 1, 2, 3, 4, 5, 6. That's 7. 1, 2, 3, 4. Yep, that's 7 right here. All right. Now let's go to our calculator. And that is $4 plus $7 plus $12, just to give you a visual, plus 21 plus 35 plus 38 plus 42 equals 159 divided by $316. Oh my goodness, Brandon, I'm down 50% on my losing side. What do I do? Man, when you protect it with this technique like we went over before, it don't matter. Why? Because guess what? 1, 2, 3, 4, 5, 6, 7. All right. Now, what do you think we're going to be up on the winning side? Same thing. We have 34 plus 36 plus 39 plus 42 plus 45 plus 48 plus 50 equals divided by 312. All right, check this out. 94%. What's the difference of both those? This is a 45% ROI move. You happy with that or not? Put a 1 in the box. Put a 1 in the box. And even if you don't get 44%, if you got 34%, because you're never going to get perfect, you still happy? Sure. Why wouldn't you be? You know what I'm saying? So now on the cues, what's my levels? I'm going to have alerts set at 5. And this is the thing. This is what I do. So if I zoom out and zoom back in, right, and I see that we're underneath, like we're in no man's zone right here, what I do in my trading view, I'd put an alert at the next closest level. So 488, I'd probably put my alert at 487. I'd put my alert right here, 487. Then I'd come down here and I would say 463, might put my alert at 465. Because I want to know when it gets close, because at that level, I can't say we will, but probability says we're going to get a nice bounce or follow through, sell off to the downside. A lot more than random, right? A lot more than random. So to the upside, since we're underneath it, I might come down to 502. Is everybody following me right now? Everybody follow me right now. All right, I see tons of 1s in the box. We'll do one last stock with the same logic that we just talked about. And then if we break this, like you keep these lines on your chart, we break this, where's the next area that we're going to? We should come down here to 445. Next one would be 431. I have these on my charts. I have them on a couple like Tesla, Amazon, and SPY because those are my babies. All right, we'll do one more. Someone put it in the chat box. Someone put it in the chat box. Which one you guys want to do? One more. All right, AMD. Valentine says AMD. Just so you can see how simplified this is. Let's clear our drawings. Same thing. You have trouble pinpointing this out. It's easier to zoom out. Get a drawing thing right here. See how I'm doing this? All right, so now I get my drawing tool. Put a line right here. Put a line right here. Right? Put a line right here. Put a line up here at this 52-week high. And that's probably where I'm going to leave my lines. All right, so now this is textbook. Where's AMD at right now? Are we at an area of reaction or are we not? We near a reaction area. AMD, we got to keep on our radar. So 723, we have earnings. 730, earnings on after it closes. So 730 is next Tuesday. I would almost, high probability, I find it hard to believe we're at a reaction area that we're going to trade sideways. So if we look at AMD, an actionable trade, depends if you want to hold this through earnings or not. Now would be the time that you want to do it. If you want to hold this through earnings, you could take, let's see, 30th. You could take 24 days of time, and the IV didn't increase yet, and you could do something real crazy like this right here. AMD, what's the price? 154. Tomorrow when we come in, if we come down here to like 153, and we're averaging about $7 a move, we could go out $7 each way, maybe even 10 each way, and see what the cost is. So at 154, 165, I mean, you could almost go out probably maybe even 15 or 20 because we're going to get a pop or drop through earnings. So 154, 64, 74. So the 175s are $250. And the 140s are the 135s. Man, that's a little bit low. 140. The 140s, they're $315. So now if we come to earnings and we see what the previous earnings did, we gapped up and down. We gapped 160. That's a 20-point drop. So now if we get a 20-point drop either way from 154, we're going to come all the way up here to 174, or we're going to come down here to 134. So then it puts us in the money where we're paying $3 right now, right? That could be a trade for us to keep an eye on. We at the reaction zone. Now we take our logic and method. What we do up here, you put an alert right here. Let me see where we're at. Our line is at 185. We put an alert at like 182 for a reaction area. We put an alert right here at 152. We break that. Look here, we have a line at 127. If it drops 20 points, it can come right down here. We put an alert right here, maybe like 128, 129. You see how easy doing market structure and creating support and resistance is? And the same thing for day trading. It's exactly the same thing. So if we come to a different stock like Tesla, same area. You come here, 5-day, 5-minute chart. You can do the same exact thing. Oh man, Tesla dropped. Holy mackerel, I forgot I had earnings. Same thing though. You come right here where you have a recent low of the day. You got a high of the day. You have another low of the day. Right? Same thing. You trade it. You have a bounce right here. Look what happens the next day. Now you have levels to trade it from. Remember the same thing we just talked about? Guess what? This is not as hard as it's not as hard as what people make it sound to be. We come up, we come back down, we bounce off this reaction area, right? We got that reversal arrow. That's a great call situation. We come down, we close underneath it. That's a textbook short. We come right back up, come down. We got the reversal arrow, another short. Right off our areas. Right off our areas, but it takes preparation the day before. Now you come into the next day using the same exact lines. You get a call trade, bounce to the upside. Reaction off this area to the upside. We close underneath it. Even if you bought this put next candle, you might get stopped out for the call, to take the call, but then the call is the winner. Next time it doesn't fake you out, it pushes right on down. Then you go to the following day. We break underneath this area, huge pivot. We sell off and push down. See how easy that is? Absolutely it is. Absolutely it is. All right, I told you now. I'm going to give you guys some stocks to keep an eye on. Let's see here. Strangle. Trading ideas. I'm going to put this in the Discord. AMD. What did we say on AMD? We said, wrong one. AMD, we said 8/16 expiration. 8/16 expiration. We said 175 calls. And we said, what did we say? The 140 puts. So there's one trading idea with our straddle or strangle, right? Now we're going to find a couple different things for some bullish and bearish plays and see what we can find, because we always like to make money. Let's fire up the screener. Let's see what we got. If you guys don't mind, if you guys got questions, feel free to keep them. Feel free to get ready to drop them in the box or come on. So we have a couple different stocks right here to keep an eye on. Let's see, Boeing. All right, Boeing is actually looking real good. Real good. This one I would trade for a directional call. All right. I would take Boeing calls if we break today's high. And I think we'd ride up here. That'd be an easy like 3-4 point push to the upside. Let's see if there's something else in here that didn't quite move as much. Google with an L. Did that have earnings today, or is that 7:23 after the bell? So Google's actually down 177. So it's down here. Man, I like Google. I might take some leaps on that, but it's not ready yet. Let's see here. OKTA, Okta. Here's a good one. I like this right here. This is why. So our moving averages are bullish, and every time we get a green box on a bullish moving average setup, right here, price pushes up. Right here, price pushes up. Right here, price doesn't have to, but it should push up. I put my stop out about right here, 93.38. If we break this high tomorrow, we're probably coming up here to around $100 a share. Ideally, we should break this. You could take 4 weeks of expiration time, but that's a good one. OKTA could take the let's see if we're going to go 4 weeks of time. Depends if that's what you want to do. It's super safe. Octa 4 weeks of time, 7, 14, 21, 28. So you're going to take this right here, the 100 calls. Look how much open interest there, 4,000. They're $225 a contract. So we're going to go with the 8/16 expiration as well. EXP, and I like the 100 calls. Calls in parentheses. If we break, and it has to break today's high, like I said. If we break today's high, which is 97.25. If we break 97.25. All right, let's see what else we have on here. Is there any cheapies? Cheapies. Nah, I see LLY. LLY. Yeah, we got our own profit calling stocks and options. I actually like LLY. I like that a lot. We had a huge push down. I think it's going to start making its way up here. But this one's going to be expensive. LLY, 4 weeks of expiration time. They're $3,000 right at the money. But yeah, that's going to be too expensive for most to trade. So we won't look at that one. CHTR Charter. Open interest. They're about 370. Yeah, that one's a little bit too expensive too. What's ZS? Is that Zillow? Nope. That one's a cheap one. ZS. We'll just go Boeing because we all love Boeing. Boeing Airlines. What's that chart look like again? Boeing. Oh yeah, that's fine. And plus, it should have an earnings run. I like Boeing. Boeing. 8/16. 8/16 expiration. Could take what? The 25. They're 260. The 200 calls. I think we could roll with that. 200 calls in parentheses. If we break today's high, 187. All right, and then we're going to go with a put trade, and I'll give you guys questions if you guys have any. MA MasterCard. Oh, I like this one. It's right underneath the averages. That's looking good, especially in a bearish market. MA, that one's gonna be a little bit more expensive, but we can go out of the money for that. 4 weeks of time. Yeah, we can go right here and buy a contract for $300. 415 puts. Not bad. 415 puts. 8/16. 8/16. Expiration. What we say? 415 puts. If we break, now you like this? Hey, I appreciate it. If we break the low, I'm gonna go 441. And then we'll do one more put. MasterCard and Visa is technically the same. Baidu. Let's see what Baidu is doing. Baidu's a cheapie. If we are bearish tomorrow, that might come down. What's Baba looking like? Baba's looking bearish. I'm just not in love with the chart. mRNA. Moderna. I like Moderna. I think I might push down here. Same thing. If we get a red box, we're underneath it. It's not. What's PayPal looking like real quick? PYPL. Man, the earnings are coming up. It's just hesitant because what if we get like the earnings run? You know what I mean? All right, this one fell. Like because that earnings. That one was what? Before market? Yep. Huge drop. I think GM could drop. We'll watch that one. Or now we go back to Baidu. Chinese stocks. That should fall. and that's cheap for a lot of people. We'll go Baidu. Baidu, 816 expiration. We go with the 90 puts. 90 puts, they're affordable. And if they break 89.75, 89.75, I'm gonna put this in the chat, and I will post this in the Discord as well. But all right, hey, you guys have any questions? It's your time about anything. You guys got it right now. Fire away if you have any. Does anybody have any questions? Any questions? If not,
Hey,
okay.
hey,
Go
Brandon.
ahead.
So I don't have a question. I really don't have a question. I just wanted to ask, can I get this recording and the recording from last time you said with the strangles and the straddles? Because I actually didn't see that.
Yeah, I can. I'll post that. I'll post it in the Facebook group.
Okay. And like I see how you was doing the how you was going in the upward and downward, and then you put the lines on for the support and resistance. But I see you have arrows on yours. So even though without the arrows, we still be able to do that same thing. If I look at just a naked chart, I should be able to do the same
Absolutely,
thing.
bro. Absolutely.
Okay. Okay. I mean, you made it look real easy. I mean, you made it look real easy.
Especially if you utilize the strangle and the straddle concept. I got the arrows because that's like a reversal arrow. So it gives me the confidence to take trades even more on side of that. So the new where are we at here? Let me show you something real quick. Here you always open up can of worms.
I know.
So on the new Swingmaster Pro AI, we'll go to SPY and we'll just put in a 5-minute time frame. What happens is you see we have these are called order flow lines. They're I have them created just like moving averages, right?
Okay.
What happens is if our candles are green, right? You see how our candles are green. What happens is you see this. We now have reversal arrows right here. You see that?
Oh wow, yeah.
You can take the call right here when that candle closes. There's a winning trade. Price comes down. Candles are green. You could take that buy right there or right there. There's another winning trade.
Yeah.
You come down. Candles are red. This right here. I wouldn't take this, but I'm training for it, and I'll explain to you why. But I would definitely take this one. But I wouldn't take any of these. But if you see, price ends up pushing down. The reason why is because we get the reversal arrows and we are trading sideways. That's chop to me. I need to get exponential move up and then down for me to take the next buy. Like this right here, I would probably take it if my candles were red, if I knew we had a line right here, right, from a support or resistance. But since my candles are green, I wouldn't take that. So what happens is the reason I wouldn't take this one is because we pushed down. We never really got a pop to the upside, but we did get a pop here. Then I would take this reversal arrow that's hidden behind the sell. It's actually a 2-and-1. Follow me?
Yep. Nice.
What I like to do is, you know me, I'm a 1-minute sniper, right? Very easy for me because I can see my averages are banked, so I could scalp ES right here. I'll take that buy. I would take this buy. I would take this buy, and I'd be done for the day.
See, I'm not that quick. I can't. That scalping for me it don't work for me because I'm not that fast.
Yeah, that's fine. You know, you don't have to. You know, but if you want something slower, the same concept is you go to the 15-minute time frame. You just want to get a lot less signals, but the same thing is if our cloud, right, is bearish or bullish, what you want to do is we've been bearish. You want to wait for a reversal arrow? Here's your short. Here's your short. Here's your short. Here's your short, right? We're still bearish, so I would probably take this short. I would probably try to take this short, but I don't like it because the candles are green, which tells me we're probably going to start trending to the upside, and that's exactly what we do.
Got you.
So then I would flip it and say, well, I still got a huge push down. We're respecting this right here. I will take this buy with the stop loss right here. We get a push up. I would not take this trade. I would probably take this one and probably get stopped out for a loss.
Got you. Love it.
So That's the reversal arrows that you asked for.
All right, no problem, no problem. Now so this is a new Swing Master Pro.
Hey, that's good. That's a good can of worms today. You know what I mean?
Mhm.
But those same arrows is built in my Thinkorswim right here. So it's in TradingView. It's a little bit easier.
Okay, no problem. Thank you.
Yep.
And I'll
Mr.
wait
Williams,
for those videos.
what'd you say, Greg? Are you done?
Yeah, I'll just wait for those videos.
All right, boss. Got you.
Thank you.
Yep.
Yes,
Michael
sir.
Williams, you up?
I got a question. So man, I got my first little warning from Thinkorswim today because I guess I was approved for margin, and I was thinking I was trading just only in cash for the straggle, the straddle, and the iron condor. Do you have to have margins for those?
No, you only have to have margin for the iron condors. And how you bypass that is you can take the strangles, the straddles, and the iron condors in a margin account. How you bypass that, because the reason you got that flag is because you don't have 25K in your account.
Yeah.
How you bypass that is if you take a strangle or straddle today and you close it out today, you're going to get a warning. You get 3 warnings before they basically put you in timeout, right?
Yep.
So if you buy it today and then sell it tomorrow, that doesn't count as a day trade. So you could do that unlimited times. You just have to make sure when you take them, you hold the trade for 1 day. So with the iron condors, the trades we take today, we close out tomorrow. So that eliminates or bypasses that pattern day trading rule that you're experiencing.
Yeah, I got on the horn with them and had to open up another account so I could just do cash for that one for the day trades.
Do the cash account for the day trade side. For the swing trade side, do the margin. If you plan on doing the iron condors with me, I highly recommend it. I got probably like 40 or 50 people making $1,000 to $3,000 a month with not even using 10 grand of capital. So it's definitely a huge benefit. You know what I mean?
For sure. Appreciate it.
Yep. Some guys we got $100,000 and they're making 20, 30K a month. So they the big dogs.
I'm trying to get there.
Hey, the same thing that we all doing. Hey, we all start somewhere. You know, I started my journey in 2016 and I started with $3,000. Now I'm here 8 years later. I have enough to pay my bills, take us on vacation. My wife stays home with the kids. Everything's paid for. We eat good, and hey, we can't complain. You know what I'm saying?
Yes, those are good problems to have.
Absolutely. So, hey, I appreciate it. Does anybody else have any other questions?
Yeah, I got one.
Go ahead.
All right, I want to know what is the best way to set alerts for buys and sales on the Swing Master Pro?
So all you do is you come over here and you see where it says buy.
Yeah.
You have to right click that and press add alert. And then
Gotcha.
when you go to the cell, when you get the cells, you have to click the cells. So you have to click one cell and one buy. So that now you're getting an alert on all the buys and all the cells on whatever time frame chart you're on. So if you want alerts on the daily time frame, you got to go to the daily time frame and set the alerts for the buys and the sells. If you want to day trade, then you do it on whatever time frame you're trying to day trade. I personally don't set the alerts on the day trading side. The reason why is because when I come to the day trading side, I use the ledger over here, which I can see the 5, 15, 30, red's bearish, green's bullish. So I'm good. I set the alerts for the swing trades because I don't want to be sitting at my computer every single day, or I should say all day long. I like to sit at my computer for an hour or two a day, and then I like to walk away. You know what I'm saying?
Gotcha. And that new version, is that available now, or is you still got that for yourself? Just working on it.
It's about to be released. So
okay. All right.
Absolutely.
All right. Thanks,
Hey.
Mike.
Yep.
I did have one more question.
Go ahead.
Let's say in the mornings you going through the calls and we break that support or the resistance level. And so we all riding the rocket ship up. When, say if I missed that first call and I'm trying to get back in, how do I determine which call to use? Let's say you went in with like a 55.90 for that when you first break. If I'm up some, let's say I see it go 10 bars up, which strike do I use to get in then?
So I like to say on that specific technique, it's one and done, so you don't overtrade. But if like, all right, today SPY's AI Lotto high target was you would have taken the 558 calls. I would have traded 558 all day long. I would have taken the 558 calls here. I would have taken the 558 calls here. I would have taken the 558 calls right here with the reversal up.
So you're just waiting for it to drop back down to that level, and then when it's
Yes,
pushing
sir.
back up, you take it. Okay, I got you.
Yep. Yes, sir. But remember, we want to get green, stay green, and enjoy our day. All right. Hey, we got any other questions? All right, do me a favor. If you got value from this and you understand how simplified finding the support and resistance is right now, put a DCG in the box right now. Do that for me. This is streamed live and recorded. If you find this simplified, I told you it's not rocket science. It's pretty easy. Just give me a DCG in the box right now. I see a couple DCGs. They coming in. All right, awesome. So, hey, appreciate you guys. I will post alerts inside of Facebook and the Discord. I'll post all the recordings from last week because I don't think I did. That's my fault. Stay on me. But anyway, live trading tomorrow. Be there, be square. Let's make some money. Let's keep having fun doing it. And let's grow these accounts because 2024 is going to be our best year yet. With that being said, y'all have a blessed one. Catch me on the next one. Beast Mode.